In terms of how it's impacted the incumbent banks, I think it's given them a little bit of excitement.
For Alex Bank, we believe we'll be profitable this year.
Our immediate goal is to be fourth largest by customer numbers by the end of this year.
E-wallets were a stepping stone to eventually get into a bank.
We have 3 million customer base of banking customers.
Asia Pacific's financial services space is entering one of its most interesting eras yet. We are witnessing the birth of an entirely new breed of banks at a pace that we've never seen before. Many industry observers would point to the introduction of digital banking licenses in East Asia, notably in Hong Kong and South Korea, as a move that triggered an arms race among Asia Pacific's regulators to each roll out their version of a digital banking framework. WeLab is among Hong Kong's 8 licensees that started as a consumer credit platform. The introduction of its digital banking arm, WeLab Bank, represents the Made in Hong Kong Fintech startup story.
When the regulators introduced the concept of virtual banks in Hong Kong, they had a few initiatives in mind, right? Financial inclusion, promotion of technology and innovation, doing things a little bit differently. But ultimately, at the end of the day, they wanted the customers to benefit. So as I think about these 3 criteria, I believe collectively as a group, all virtual banks have done that in Hong Kong. I would say in terms of digital bank adoption, Hong Kong has over 2 million digital banking accounts now. So that's about, 39% of the younger population between 18 and 45. So I would say that's a formidable number in terms of digital accounts. And I think lastly, in terms of how it's impacted the incumbent banks, absolutely. I think it's given them a little bit of excitement or a nudge in terms of, do we need to be more competitive for deposit rate? Do we need to provide more relevant banking services, right? Do we need to extend our offering hours beyond the traditional Monday to Friday because of our customer needs? So all of these are actually very positive moves for the Hong Kong banking industry. And we're really glad that we've been able to encourage some of that movement in addition to the direct impact that we're making to our own customer base.
While the Hong Kong Monetary Authority found success with its licensing regime, the journey wasn't always smooth sailing. Such is the nature of innovation. In Australia, 2 digital banks that once showed great promise, namely Volt and Sincha, unceremoniously returned their banking licenses. Meanwhile, 86400 was acquired by National Australia Bank, marking the end of its independent operations. Where others have failed, players like Judo Bank and Alex Bank are forging ahead, pushing boundaries and continuing to innovate in Australia's digital banking landscape.
The Australian banking marketplace has 4 main banks that are dominant with an 82% market share. It's extremely profitable. And what that means when you've got such dominance in the market is Australians don't necessarily get a fair choice or opportunities to support the products they're looking for. So what there was this opportunity, or we saw highly profitable business models in niche areas like small business or personal lending for cars or different things like that, where we saw an opportunity to actually help the customers, serve them better, give them a better price, and also build a banking profitable business. We always thought the best strategy was to sort of attack them from around the edges in products that they're less interested in. And so that's what we've done at Alex Bank. For Alex Bank, we believe we'll be profitable this year, which will be fantastic when we reach that milestone.
Meanwhile, in Singapore, the Monetary Authority of Singapore, MAS, has issued 2 digital full bank licenses and 2 wholesale bank licenses. The digital full banks can offer services to both retail and non-retail customers, while the wholesale banks are limited to serving non-retail customers. However, there's a 5th player in the mix. Leveraging Standard Chartered Bank's significantly rooted foreign bank status, Trust Bank was launched in partnership with NTUC.
And I think when we look at how digital banks have evolved globally over the last 10 years, there's been a real kind of trend. So for me, when you look at the more pioneer banks in the West, UK, US, typically they were built as standalone organic banks. So some have already reached profitability, and many have really created strong credentials in the market, a reputation for delivering great service. But it took them a long time to get to where they got to. So what we've seen in Asia is the use of consumer ecosystems more widely. I think for us, when we looked at the market opportunity, having that ecosystem was really a good way to accelerate growth. But also on top of accelerating growth, acquire customers in a very cost-effective way. And of course, as a digital bank, as you're striving towards profitability, then that low cost of acquisition is incredibly important. We've made good progress there. As I said, 700,000 is equivalent to about 14% of the market in Singapore. So I think as we look at the path to profitability, that scaling, the customer base, the building out of the product stack is definitely making good progress. Already, Trust Bank feels and looks like a very well-functioning bank. It's no longer just a startup with a couple of products. Our immediate goal is, end of this year, we want to be the largest, the fourth largest retail bank in Singapore by customer numbers.
Largest is pretty ambitious.
The largest would be a bit overly ambitious, but our ambition is to be fourth largest by customer numbers by the end of this year.
Across the causeway in Malaysia, Bank Negara Malaysia's new digital banking framework has facilitated the birth of 5 new digital banks. 3 were granted conventional digital banking licenses and 2 were granted Islamic digital banking licenses. Among the 5, Boost Bank was formed as a result of a partnership between 2 major corporate powerhouses, namely telco operator Axiata Group's fintech arm Boost and RHB Bank.
There is still a market, still a large number of businesses who are not able to get access to bank financing in a seamless manner. Because we've been playing in this space and we think the bank is the way to continue to serve that space, perhaps in a more profitable way. We will have a more immersed, embedded experience for our existing Boost customers to become bank customers. But instead of using a wallet, use a bank, all right? So in terms of what you did on Boost before we launched a bank and what you did on Boost after you launched a bank, it pretty much remains the same. You're just pulling your money from a bank account. So from that perspective, it's very much embedded. Right? So we're looking to have the seamless experience. I mean, the way we think about it is e-wallets were a stepping stone to eventually get into a banking, right? The challenge with e-wallets, especially in the Malaysia context, it's difficult to continue to make a case for investing in e-wallets.
It's true.
Unless you have an ability to monetize. So, I mean, our thesis is if you have a bank really earning the money, then there is a case to continue to invest.
There are many around the region that subscribe to Sheyantha's theory of evolution, from e-wallet to digital bank, from China's Ant Group and WeChat to South Korea's Toss Bank, and close to Southeast Asia, Maya Bank from the Philippines. Maya Bank is among the 6 licensed digital banks in the Philippines, which had its start as an e-wallet previously known as PayMaya. Having an existing ecosystem certainly propelled Maya Bank in the digital banking race and helped drive financial inclusion, as Manu Panda, its COO, will attest to.
From 2022 to 2023, we had a doubling of the depositors base. We had a 70% increase in the deposit volume. Our loan disbursals went up by 7 times. We had 3 million customer base of banking customers. So this was possible on the back of the fact that we were able to launch a bank within 6 months of given the license. We were the fastest to launch in the markets. For a lot of our borrowers, Maya Bank, 59% of the borrowers, Maya Bank is the only loan line that they have. So we can safely assume that these are the proportion of the customers that are having access to a bank product for the first time. So it would have been impossible to lend if we did not have the advantage of using the payment transaction information and create tools and artifacts that would allow us to assess creditworthiness, right? On the consumer side, equally on the small business side, it was a similar story. I think Maya is a consumer payments ecosystem as well as a enterprise payment processing, retail money transfers ecosystem, right? So we had access to customer pool and data there from which we could convert and banking customers as well. So I think the access to the ecosystem was a significant competitive advantage, and it works both ways, right?
While we are still in the infancy stages of Asia Pacific's digital banking experiment, it's already beginning to show great promise, despite several hiccups along the way. Many consumers and small businesses alike are benefiting from new regulatory frameworks, establishing a new breed of banks to serve previously underserved or unserved segments. Though not all in this race will ultimately succeed, Asia Pacific's digital banking experiment may very well create the next banking powerhouse.